Hi everybody, welcome to another update on the stock screener. Today we are continuing with due diligence on Prospera Energy. The oil price is starting to bottom out, and for next year we should be in oil. So I think the best company to bet on a rising oil price is Prospera Energy. And you can see for a year it hasn't done anything, which means this is a buying opportunity. I think this is going much higher. And the long-term trend is up and will probably break out next year. So that is where I will put more money in. There's something in my calculation that I didn't appreciate until right now, and that is this here. So let's talk a bit about this calculation that the company is giving. So as you know, currently we have about 700 barrels per day, right? That's the production right now. It's approaching 1000, and we should have an update very soon on that production. So when you calculate this 500 times 1 year, then it gives us this number. So this is the annual production barrels. And based on this, you can look also at the costs. Lease operating expenses is 7 million. So 7 million costs per barrel is 36 right now. That's the cost per barrel in 2022 at this production. What was my AISC? It was 40. So a bit higher, but look at what is going to happen next year. In 2023, we will increase our production to 2000, which is very possible because we are currently at 1000. They can drill a lot of holes and it will go to 2000. But look at the costs here. It only goes to 10 million. So what is the cost now? So yeah, 10.3.4. So the cost is now the 10 million divided by the 727. So that's 14. So what's that? That's the cost has been cut in half, right? It has been cut in half, basically. So minus $20, right? So this is something that I didn't look at. So let's say we just do it minus 15 to be conservative. Now the cost is 25 in my spreadsheet. It should be actually 15, but I'm a bit more conservative and I use 25 now. Then in 2024, we have 11 million costs divided by 1 million barrels. That gives us 10. And the same for 2025, we have 10. So that's another $5 costs down per barrel. So I did minus 5, and that's 20 and 19. So yeah, so here the first one I did minus 15, while here, yeah, it's minus 20. So a bit more conservative. But look at the numbers now. So the free cash flow calculation, we just use the latest revenue numbers, 12% royalty minus AISC, which is now 25 instead of 40 for next year, minus capex is around 7 million because $1 million per well capex, and each well gives us around 300 barrels per day. So if they want to go from 1,000 to 2,000, they need to drill 1,000 barrels per day. So that's around 3-4 wells. So it's about 5 million capex. I took 7 because they need to grow much faster, probably to the 5,000 level. So let's say 7 capex. SG&A is given here, 3 million. So I took 3 million and some interest payments. So that gives us this number for 2023. For 2024, we use this AISC and this production number. So I think in 2024, they will be at around 3,000 barrels per day, which is also given here, 3,000. And then in 2025, they will eventually go to the 5,000 level, which is given here. They think that they can go to 5,000 in 2024 already, but let's say it hits in 2025. And that will give 3,900 because they have 80% working interest. And that's this 3,600 number here. Okay. So based on these numbers, we have our valuation. 5 times free cash flow. Current share price is 0.08, which is very cheap. It's 40 million market cap, fully diluted. Current oil price is 80, and that will give us, and they also used 80 Canadian, so that's about 60, but they use 60, of course, WCS, and that's around the current 80 WTI. So it's about the same. And when we look at these numbers, it also matches a bit with their numbers. So their net income is in 2023, it's 30 million. And here it's 20 million, then 40 million, 50 million, and 60 million. And here is 70 million because I'm a bit more conservative on the cost side. So let's say we go to $90. Then we have an upside of 40 million to next year to 140. So that's a triple, right? Then in 2024, we have fivefold. And 2025, we have an eightfold based on 5 times free cash flow. So plenty of upsides if we go to just $90, which is, I think, the equilibrium price for oil. And yeah, I'm going to buy more of this because there is plenty of growth. I didn't take into account that the costs are going to come down, apparently. So now there is more upside. and huge leverage to the oil price. Look at 100 oil, then we have 10x upside in a few years. So I think this is the best play for oil. Look at the reserves, 400 million barrels, and their production is only about 1 million. So that's 200 to 400 years of reserves based on current production to the inferred barrels, around 400 million. So the reserves are enormous. So we can expect more growth to come after 2025, 2026. They will keep on increasing production at an exponential pace. And yeah, what can I say? Look at the balance sheet. The equity is expected to go where is the equity? From 20 million to 90 million. So it's going to grow very fast in 2024, and then in 2025 it will add another 70 million to that. So that's probably going to 160 million in a few years, and we're only trading at 40 million. So yeah, looks very good. 4x in just 2 years time, which coincides with our $80 oil. It's also a 4x from here to here. But at $90 oil, it will be even higher. Okay. So just wanted to update on Prospera Energy. I didn't take into account the costs that are coming down due to the increasing oil production. And that will have massive consequences for this stock. Probably we will see this at least double next year and then triple the year thereafter. So this trend is going to continue. So that was the update, and I'll see you in the next video. Bye.